Hello, welcome back. I'm with Dave Anthony, the CEO of Asante Gold. Dave, good to see you.
Yeah, good to be here. Okay, nice to be in Zurich.
Just for those less familiar, brief overview of the company.
So Asante Gold, up until last year, was primarily a small exploration company. We did a pivot in March of last year toward becoming an operating company. We started studying the Kubi project, but along the way we had an opportunity to acquire Bibiani mine. We announced last September that we would be doing a refurbishment on the process plant, and we would be pouring gold in the third quarter of this year. We actually poured gold in July, so a little bit ahead of schedule, and the ramp-up's been going well. It's outperforming week over week and month over month. We're really pleased with it. We also had the opportunity to purchase Chirano this year, and that closed in August. So the two mines are working together now. The two process plants are 15 kilometers apart, and between the two we're on a run rate right now at about 350,000 ounces a year. That's going to grow over the next year to about 450,000 ounces a year. So it's been a fun year, and more fun to come.
No, well, what I like about what you've done over the last year is that you've actually exceeded expectations and getting into production, and what you often see in this industry is complete reverse of that, so credit to you.
Over the course of my career, I've learned not to lie to myself.
Yeah.
Okay, we all think we can achieve wonderful things, but you need to temper that with a little bit of reality and accept that there is some risk involved. Principal partner for me has been Evan Swanpole, who's my project director, and he's now the VP Technical Services. And between Evan and myself, we argue a lot about what's achievable and what we need to do to get there. We've also added some key players to the team. Fred Adekuma is our Executive Vice President and Country Director. Fred is an old hand he's not old, but he's well experienced in Ghana as a Ghanaian and a mining executive. And of course we have John Grigorcevic as our CFO. So we built a pretty highly capable team, and that leadership is permeated through the organization. We've hired some very good people.
Good. Before we get into the assets, can you just remind everyone of your capital structure, so sort of market cap, shares outstanding, cash in the bank, that sort of thing?
So shares outstanding, I think, is in around 450 million. Market cap is about 520 million today. As far as productivity goes, I already mentioned we're producing now at a rate of about 350,000 ounces a year with some expansion on the way.
And cash in the bank, burn rate, that sort of thing?
Cash in the bank is obviously confidential. There'll be a third quarter report coming out, but it's, cash in the bank I think is between 10 and 15 million.
Okay, good stuff. Looking at the assets, obviously, like you said, you're pretty ramped up pretty quickly here. Can you just talk us a little bit about the geological setting? You're in Ghana. What do the rocks in the ground look like?
Well, with the acquisition of Chirano, we now own about 53 kilometers of what is known as the Sewfi belt. It's several structures. The principal structure are the Bibiani Shear and the Chirano Shear. Up to now, those two shear zones have produced over 8 million ounces. That's over the last 100 years. We expect that they're probably in around 10 to 15% explored, and very little exploration has been done at depth. So, as we develop Bibiani, we've had a lot of surprises on the upside. Okay, we took it last year. We had about 1.8 million ounces as a resource for open pit, plus another 800,000 resource for underground. We've done more drilling, and we're now at about 2.3 million ounces reserve on the open pit, and still another 800,000 on the underground. Chirano is the same story. Chirano's 1 million ounce reserve, and it's another 1 million ounce resource. So the two mines have a nice run rate ahead of them. But our intention is to keep exploring and get out past a 10-year life of mine on both mines.
In terms of the open pit, what's the sort of grade looking like, and how does that differ as you go down at depth?
Grade at Bibiani, it's probably the highest grade open pit mine in Ghana. Grade at Bibiani runs between 2.4 and 2.6 on the open pit. Chirano, the open pits, there are several, is running in around 0.95 to 1.15. The underground mines at Chirano operate at around 1.9 to 2.4.
How much drilling is actually going on at the moment? You're talking about this 10-year mine life that you're trying to achieve. Is this mainly at depth that you're looking, or are you actually stepping out and finding a lot of new resources?
We're finding a lot at Bibiani. We're finding a lot at surface. Okay, and we're finding a lot on the satellite pits that was never explored before. The focus at Bibiani was always on the main pit. We've discovered more than 150,000 ounces now on the satellite pits, plus what's at the main pit. Chirano, we've got a real opportunity that we're focused on. I can't talk about it yet, but that's getting a lot of near-surface exploration as well. The underground exploration obviously continues at Chirano, but all up, between the two mines, we're drilling over 60,000 meters per year.
No, that's very good. What's your current guidance that you're giving the market at the moment in terms of all-in sustaining cost? And
AISC on Chirano today is about $1,350. It's a little bit high. We've got some initiatives to bring that down to $1,100. We expect to be at $1,100 by this time next year. AISC on Bibiani is just over $1,200, and again with some expansion, with improved grades going forward, we expect to get that down to about $1,100 as well.
And what does this look like? I guess you've just mentioned there you're doing a bit more drilling, you want to get 10-year life of mine. Where does this company go to? Because you're moving pretty quickly by the sounds of it. You're targeting, what was it, around 450,000 ounces?
450 by this time next year. Right. Okay, we should be going underground late 2024, and we should be producing from underground early 2026. That's going to get us up to 600,000 ounces. I guess you call that organic growth, okay? Once we get Chirano bedded in, which should be over the next few months, we're going to be back on the M&A trail. Principally in Ghana, but looking toward West Africa over time.
What are most investors sort of concerned about at the moment?
Most investors are concerned that we're brand new, okay? We've done everything we said we would do, so what does failure look like? Right? Yeah. Where are the risks, and how do you know you're going to avoid those risks? For us, because we're able to hire basically hand-picked people to build the team. Look, a year ago we were 4 people in the company. Now we're 2,000 people in the company. On the Bibiani side, it's all been hand-picked, okay, basically to meet my vision and to meet Evan's vision with what good looks like. At Chirano, we're busy doing some study with Partners in Performance, a well-known management company, to say, okay, what are the synergies available between these two operations that are joined, okay, so that we can define what good looks like and get our G&A down to about $4.50 a ton, because it's currently at about $7 a ton.
We've already run through a lot of this, but over the last 12 months, what are you most proud of as a management team?
It actually comes to team building. Okay, we've got a solid team. We've got people who understand the vision, who are committed to the company. The behavior, I guess, reflects the CEO. I like to see things done quickly. I like to see decisions being made. I don't penalize mistakes, but I do penalize not making decisions.
Okay. You were talking about M&A earlier. Once you've got the 2 assets that you currently have sort of up to where you want them. Obviously, you're talking about M&A there from your perspective, looking out at different gold deposits for your own growth. But
what we look at in terms of M&A, okay, because you can go buy anything. You know?
Well, what I was going to ask was, do you not think you're now a pretty... I mean, there's a lot of big players in Ghana. Do you not think you're now a target for acquisition? We
are about 45% owned by Ghanaians. It's a Ghanaian mining company. There's 4 or 5 expats across the company. That's it. It's run by Ghanaians. It's owned by Ghanaians. We've got cornerstone investors who have no intention to sell.
In an ideal scenario, obviously you're looking at West Africa gold. What type of deposits would they need to be nearby, or would you be open to opening up a new territory?
Our model up to this point is to identify a distressed asset. Maybe a parent company wants to move it or get out of the Ghanaian environment. We're happy to take it on. With our Ghanaian footprint, we find it easier to operate in country than foreign nationals would find. For me, we recognize that the Ghanaian government is a 10% shareholder. They have a free carry, and they're a partner in the business. We have people who live in Ghana who are prepared to go and work with the regulators, work with the government authorities to first of all identify and agree upon opportunities and also upon execution strategy. So it's a different way of doing business relative to what you could call colonial miners who rock up, develop ore bodies, leave behind some legacy in terms of community developments and so forth, but don't actually leave a lot of the wealth that they generate behind. That goes to places like Toronto, London, Sydney.
How is a company who's sort of grown as fast as yourselves been able to appropriately evaluate an ESG strategy and really operate in country as quickly as you have?
Chirano is a mine that's got a 15-year history, okay, and it's got a solid parent, that's Kinross, okay. They did a great job with ESG, so we pick that up and see where we can add value, okay. Bibiani, same story. The parent was Resolute. They had a great ESG program. We've just picked it up and said, okay, how do we add to this? Okay, so in the Bibiani context, they had about 35 full scholarships for advanced education. We bumped that up to 70. They had for the RAP, for the relocation, you know, we go top shelf on the relocation program. Make sure that as well as relocating people so that we can advance the mine development, we also put in facilities such as a community center, such as education centers, schools and so forth, so that the community can continue to thrive.
Okay.
Obviously with 45% Ghanaian ownership, the ESG equation is, I think it's probably better than most other mining companies just because you know, it's an indigenous company.
Just finish things off, over the next 12 months, what sort of material catalysts are we expecting?
Well, I think a lot of investors are looking to see a run rate that is equal to or greater than what we've promised. So that's material. You get 2 or 3 quarters on a run rate, as I've already talked about, that's going to get you what you need. But also, if we do an M&A, if we bring in another 200,000 ounces of production, another 300,000 ounces of production, that takes us close to 1 million by 2026, which is another, it's another postal code.
Dave, thank you very much.